Alright, so I'm going to show you guys how to mark up the UJ chart. Well, this is UJ in particular, but this can go for any chart really, because every one of them has support, strong support and resistance areas that you're going to want to take note of. So I'm kind of switching between time frames here. Just to get an overall idea, I guess you can go to your monthly chart, because this is the highest time frame. Here, what you would want to look for are those clear areas of support and resistance. This is going to be like your strongest ones. So I can see this over here. Wow, it's trend line. For this, we just want to maybe use a horizontal line or horizontal ray. And you'll see what it does here. So we got a level of support here. And when you're drawing your horizontal lines to mark off your levels of support, you just want to make sure it's touching most of the wicks or going through, where the candles themselves are closing for this monthly. So, and the reason I'm saying that is because if you notice where they close and then you go down to a lower time frame, you're going to see high amounts of rejection there. And then because it's closing on a higher time frame in that way, it's just more, like just for an example, if you had this this bearish engulfing here, so let's draw that circle around it right here. Right. If you had this bearish engulfing, right, and you can see it over here too, but if you had this bearish engulfing and you're on the monthly and you're on a downtrend, or you're kind of stuck in, a little bit of consolidation here, you would want to take that, or you'd want to at least look for sells at that point. But not a lot of people are on the monthly charts, just to show you how this would look on a daily. Let's go back here. See, you're not even going to see it, it's so spread out. So you got to go all the way to the left. Look at that. So clear resistance. A whole bunch of retests. This would have taken a while to actually sell off and make the move on, from what you're seeing on monthly, where you just see this, what is it, this long red candle. This shit took a while. This really took 3 months to sell off out of the range of resistance. And the same thing over here, it took like 2-3 months. So I'm just showing you guys, from the monthly chart or the monthly time frame, the highest time frame you have possible, most ends. This is what you'd see along the lines of what you'd see. But you don't have to worry about this time frame too much. What I normally just try to have you guys look at is daily, which is this one here, and 4 hour. Right, so daily, let's mark up our daily chart for UJ, because we don't have anything going on right now. It's just, there's no levels marked off. So the first thing I'm going to do to mark up UJ is see where we're getting these levels of support and resistance, the main ones, right? And I'm only going back, since this really, like from here to here, this is where price would be relevant. All the way back here maybe, but it's all the way down here. So it's only when price may start getting back up into this area that you can come back and start marking these levels, of resistance and support. But right now, it's mostly over here. So let's see what levels we got. And I would always mark off my zones with this green. You know, it's like a bright green, just to let me know. It's a good indicator. But a bright green, um, thinner rectangle. Now you're supposed to kind of go by the, however big the engulfing candle is for that zone. Um, this is just to help with better entries, because it's when it does get into the zone, it'll show the most rejection usually. That's why I like to keep them thin, uh, maybe 10, 15 pips wide. You know, it just gives it a little breathing room, but this means that you yourself would have to kind of be on point and, as far as just being alert in the market to catch these opportunities. So you really do kind of have to be, attentive, like just kind of have an idea of where the market is at all times. That's why, I say you gotta get really involved in this, or envelop yourself in this, and just for a certain amount of time, till you know it, like, or you feel like you know it like the back of your hand. And even after that, you still gotta learn. But the most important thing, like what I'm doing here, is just because these are levels where price was stretched, like they're wick levels. So if you, like how you're seeing candles here on the daily, if I go up to like a weekly chart or something like that, you'll just see wicks, right? You'll just see, well, up here you'll see wicks. Down here you'll see a heavy sell-off. Wow. But for the most part, when you're going down or going to higher time frames, more dense time frames, those candles will end up turning into wicks. So, I mean, that was just to, show you the same thing. If you go down to like, let's say you're drawing these zones on maybe a 1 hour time frame, and these candles show up, but then you go up to the 4 hour, they're wicks. So it's, that goes to explain a little more with the time frame within a time frame concept. And so if you haven't watched that video, you should check that out. It basically, if you know what fractals are, or even if you just heard, as above, so below, it's things that are kind of, I don't say suggested, but it kind of falls in line with those, just those universal laws. Like this, even Fibonacci, universally accepted ratios, for retracements, that gets applied here in the markets. This is a representation of, I feel like, of, just a collective psyche, for people, especially like retail traders. But you don't want to be a retail trader in this. They lose all the money. You definitely want to trade like the pros. So all I'm doing right now, again, guys, marking my zones off. It's just marking off zones of resistance, right? Here I'm gonna mark off zones of support. And they're all gonna be green, because when you break a zone, well, actually I could drag some of these over here, because they do line up with the, like whenever you have a broken support, or broken level of resistance, the market will always turn that into newfound support, or if you have broken support, it will turn it into newfound resistance. So just to show you guys that, and that's, just normal market structure anyway. But you can even see it here, just as the market's going down, it's breaking below, coming back up, finding resistance. So see here, broke below support, really supports right here. Alright. broke below support, came back up, found resistance, sold off, found support. It actually went down to the next zone. Like, it just ticked it, but and it'll do weird shit like that. But again, it bought up from that zone. If you were watching, you see it just touch. What was this? Maybe, what time is this? Damn, it's daily. Probably won't tell me the time, but we'll come back to that. Let's just draw a circle there. Remember that circle, so we can come back to that. I'm sure you guys got it. Like, another clear example here. Broken support. See where it found support here a few days ago? A few weeks ago, really. It took time. Took time to finally break. So once it broke, it sold off, Then it came back down to another zone. Found support. Bought up. Resistance. Sold off a little bit. Bought up. And just a reminder, guys, this is the daily time frame, so this is going to take, I don't want to say weeks, but it's definitely not just going to happen overnight. A lot of the times you would have to hold these for maybe the duration of the week, from like Tuesday to Thursday, that type of deal. Let's see here. Alright, so let's go down to 4 hour real quick. Remember that circle we just drew? I just want to show you guys here around what time it might have been. Wow, so that's a wick. That's a hard wick right there. And that was around 6. Yeah. But the actual move did not happen. So we started finding support around 6 p.m. Eastern time, or 6 a.m., sorry. And for that day, it just kind of stuck here. And then, looks like the 24th, London session, 2 a.m. Just shot up. So that would have been a nice London session buy. But yeah, you guys kind of get it. You see the repetitiveness of this. So after that buy up, and once you saw it broke above here, it would have been good reason to get in the buys. Maybe you thought it would have kept going up higher, but what it did, it sold. Would have stopped you out, But even right here, again, clear break of support. It's finding support for maybe a week or so, and then it breaks, and then comes back up, retest, gathers orders. This is doing it for weeks at a time, maybe a month. Wow. This is like from mid-July to the 23rd, 22nd. Oh my gosh, wow. And then, wow, if you notice, we got 6, this is a morning. This is like 6 a.m., 8 a.m. And if I go down even further to a 1 hour chart, and I'm going to show you guys this because this is just 4 hour. It's only telling me like 6 or 10 a.m. and shit like that. But the session starts at 8 a.m. This would have been, what is it, 23rd July? Go down to the 1 hour, let's see here. Yeah, see, whenever you go down in time frame, it stretches the information out so much. You have way more details. You just gotta keep scrolling to your left. There we go. And these two. I'll show you this on 1 hour also. Let's see exactly what time it started buying up. So this is a London session. This is around 3 a.m. guys. I know you see this. It's just another back-tested Bob Osis entry. And let's see another Bob Osis entry here. That is around 6, 7, 8. So if you were just waking up around 8 a.m. or so, you'd have woken up to this. Like, this right here. And then, off of your support level right here, you would have had to have made a decision if it was going to be buys or sells. And let's see what RSI might have been saying around then. Yeah, not the most reliable there. But maybe on 4 hour would have been giving a little more reason. 4 hour, yeah, 4 hour was overbought right there. So you see it lining up from here all the way down to RSI, and you got a little double top there, tiny double top on the RSI, but it's just to give you the idea of break. When it breaks support, it turns it into resistance. When it breaks resistance, it turns it into support. Those are your entries. Those are what you're looking at time and looking to get into. And now we're heading back to the one day chart, or daily. Just gonna mark off some more levels of resistance here. Doesn't have to be absolute, doesn't have to be exact. Because I'm drawing them thin, and I draw them kind of towards the edge of these levels, a lot of the times they make for the best entries. Because the market doesn't have to go past, you just have to see the market get into these zones, and you can maybe execute. The zones are maybe 10, 15 pips, like I was saying. There's just a lot of bullshit, like little clustered consolidative moves. Look at that. What was support here can be seen as resistance over here. I mean, another way too, I guess I could show you here, can go down to the line chart, if this might make it easier. And what you're looking for are these levels where you have resistance on one side and then support on another. So down here, I don't really see that too much. Maybe here. This is a good level because if you notice over here and over here you have support, but over here you're finding resistance for that same level. So you can go down to the line chart if that makes things easier. I really just would normally keep it on a daily for me, to mark off stuff. Well, so we got our zones drawn back. Now I'm gonna just show you the slope. We're gonna draw our daily slope. And this is important because you want to know which side you're on, if you're on the buyer side or your seller side, at any given time. So we got these two. That's your second bounce, and that's what created the slope here for us. So from this, just knowing this, and it's going all the way down here, you're familiar with this type of structure to where it's downtrending, and I've shown you where it'll keep downtrending, find that really good support, and then come up and break this same line, this same slope, right? But there's not only one slope, there's so many that you can perceive. I just want to show you how to kind of get the main ones here. And you have to develop your eye to kind of to see when the slope is forming, right? Because I'm gonna show you something here. If you yourself, if you could have came in and this didn't quite touch it, this didn't quite give us a third bounce here, but it did, however, create a whole new slope under this, which was right here. So this is still daily. Let's go down to 1 hour. Let's see how we're gonna draw this new slope. This is clearly a new one. And yeah, you get your slope from here, from how the candles are forming as they're making their lower highs, or higher lows in an uptrend. But since we're talking about a downtrend, all of these, these are retests, but in the grand scheme of, the move that you're making that's going down, they're all lower highs. And lower highs are your entries into a downtrend, right? So when your lower highs can be lined up with a trend line, like uptrend or a downtrend line, sorry, those are really good entries to get into sell. So, and you see this on other on other platforms and everything. And we're still marking up, just from you knowing or being able to kind of see the slope or identify it. It's just gonna help you a lot more for the future moves to come. Cause let's count it here, right? So you might notice, let's say you get more experience, you might notice that it's forming. It's forming your slope. So just from you knowing this area here, and then having this sell off, you can count on a retest, right? And none of this has to be even here. Like, I'd want you to think of just the market being here, before it sold off. So if you're able to draw this from over here, create your slope, have your slope defined, especially after a break, you can set yourself up to where you're able to predict the market better when it comes back to this trend line, this slope. So slopes are really important. You do have to keep an eye on that. That's a key part in getting your trend line drawn early, so you're not missing a whole bunch of retests. But let's see you drew it here, right? Now you got a trend line. Every time the market comes back to this trend line, you're gonna execute. So let's count how many times the market would have given you sell opportunities. Right, so we got, this is right off the bat, we got like 3. I'm gonna draw them here. Fuck. Wow. Yeah, that's 3. So let's measure these now. I'm gonna measure, and we're trading strictly off of bounces on the 4-hour and daily. So if I go back to daily, get this shit all condensed again. So we gotta stretch it out. Look at this. Your entry from here, you'd have been holding, a day or two. You could have held a day or two. That's roughly, and let's get the counter, the pip forecast, the price range, or hold on. Okay. Alright, so first one here, let's see. This whole move was about 150 pips, right? You don't have to catch all of that. You could have just gotten out right here and you'd have been up 90 pips. And if it did sell off more, you'd have probably wanted to sell more. Possible stop outs at that point. That's why you wanna be entering from over here. This is your most reliable entry, because from this level you have the most resistance. And again, that level just kind of lines up with your trend line. So let's say none of that other stuff was there. It was just, you just made 90 pips, right? Now you're waiting. Days go by. It's like, you can trade these. There's definitely opportunities here, but if you're not that advanced, you don't want to stress yourself out too much, Just go for what I'm telling you to go for right now. Yeah, so like I'm saying, if you had just made 90 pips off of there, waiting, trying to see what the market's doing, you could have sold this. This would have been a 50 pip move, easy. See, these bounces, these regular bounces, you have to kind of use your own discretion as far as how many pips are you going for? How many are you trying to capture off of these moves? I'm just showing you where the moves are more likely to happen, where you should be entering those areas, but you yourself have to choose how much you want to make, because you see this moving, that's another 100 pips, easy. You see it moving that much, but it doesn't move often. It doesn't move that much often. So you as your trading brain, or you as a trader, you're gonna have to figure out how often you want to trade, I guess. Also, if you're picking your shots and waiting for these, you can trade to where you're holding your orders longer. Come off more as a swing trader than a day trader. Because I'm showing you a third opportunity here along the same line. You know what I mean? It's just, you'd have to imagine if that second move was made. Everything else hasn't come yet. So now market's forming, comes back up. Oh, guess what? It's showing resistance again. And this is the third time. So what you can see here, and this is also serving to add to the, thinking in multiples of 3. Tesla already knows the importance of 369, and he wasn't even in the markets. He was just studying the electron field, tapping into the ionosphere and things like that. But whole nother game. It still follows those numbers, so that sequence, those what is it? Intervals, increments. So just kind of getting off topic there, but this is a third bounce, and guess what happens on the third bounce? It completely breaks this level of support also that has been forming. So I don't know if you can see in a way the pattern it was creating. Let me just show you here. Nice support right there. That looks like a familiar pattern, right? Let me show you what pattern it was. Right here. Right here. And you know how that goes. Sold the fuck off. But, excuse me, just to add a little more, and it's a perfect opportunity to show you where there are fake breaks. It doesn't always just kind of obey that level of resistance or that resistance from the trend line. There's going to be fake outs, days where it's outside of your zone or your circle, and then it goes back in, and that's why it's very important to keep an eye on this for the most part. Excuse me. So here's a fourth potential. It did break above, but if you're watching and you're keeping an eye on it, let's see, it broke above on the 6th. You come back, you see the 8th. It still hasn't really even been up here since it's 2 days ago, and it broke. It's still finding a whole bunch of resistance. And then what's more, you can kind of see a little head and shoulders here. Patterns within patterns within patterns. You can kind of see a bit of a head and shoulders reversal here, right? Wonder how that looks on a 1 hour chart, but we'll see that some other time. This is a really mini head and shoulders reversal. Let's see how it even looks. No, I lied. That is not a head and reverse. Yeah. I'll show you what it is. It's one of these. One of these weird ass patterns. All doing weird. Look. And you can see this on my cheat sheet. So we actually had to go down to the 1 hour chart to see the crazy shit that was happening here. Wow. And let's see what time that kind of fell off. All the times at the bottom you're seeing are Eastern time. So wow, the real move, like if I got up that would have been hard. This would have been a hard one to tell because you would have had to follow this. If I had gotten up at around like, let's say 2, 3 a.m. to see what's going on, this would have been a hard one to tell, man, because you're having support. You know, this could have just looked like a retest, and then it could have continued up. Because, you know, after it breaks here, after it breaks this level, it usually buys up a little bit, comes back down to retest, shows that support, and then it goes on its way. So that's what I would have been thinking here. I don't blame anybody that would have been, 3 to 5. Come on, man. You got some bullish engulfings, but if you kept watching it, or kept an eye on it, sorry, you don't have to keep, watching every fucking minute of this shit. But let's say you came back around US session, right? Around 7 or 8. You would have seen it broken back below this. So when you can see things like that, where it's a break above and break below, or a break below and then a break back into the trend, those are just fake outs. A lot of times those are just fake outs, where a lot of people are getting stopped out, and you can more confidently trade, in your original direction, so to say. So you were anticipating a sell here, you got a break above, you got a little bit of support, but then you got a break back below. So that's, and what's even more, this break back below, this break below pretty much lines up with our US session, right? So if you were the type of trader that you knew that this was gonna sell off because it was in the zone, then more hats off to you. Like, you would have caught a lot of pips over, 70, 60, 70 pips. If you're not, and you would rather just wait for that confirmation, I don't blame you, and wait for the timing of it. Like, wait for your 8 a.m.s, 9 a.m.s, or your 3 a.m., 4 a.m.s times. Don't blame you, because this is what you want to see anyway. The market's setting up to move around those times. Just to give you an idea, let's see how much pips could have been caught from that. If you did sell that off. Well, 40 pips. I mean, they go down all the way here, so could have had a decent 50, 60 pip move for that. But the thing is, it took time to move that far. A whole lot of chop. Yeah, this shit took 3 days to move 60 pips. So you've been holding, This, and I'm gonna show you what you would have been hoping you'd have gotten, and you just have to be fine with those 60 pips for now, because you were gonna hope you would have gotten this type of sell off. It just goes straight down into the zone. They do happen, they don't happen as often though. So that's where your discussion comes. You wish you could catch that, but what's gonna be easier, catching like 50 to 60 pips normally, or trying to catch this shit all the time, and then you're gonna end up getting stopped out, just missing a whole bunch of opportunities, a whole bunch of easy money, when you're trying to, just pick that one shot that doesn't happen too often. And I'll show you where you need to be looking to hold, like what needs to happen, and where you'd want to get into the mind of more so of a swing trader. But got a whole other opportunity right here. It's been like 4 or 5 so far. Another bounce on that same downtrend line, right? And let's see what time that happened. Go down to 1 hour. Yeah, a whole other one over there. Let's see, where is this? Wow. Oh shit, jeez. Oh god. Oh, yeah, like 2 more, guys. Yeah. So on the 19th, it gets into contact with our downtrend line. Does some fuckery here, fake break, trying to violate. But on the 20th, and this would have been a good entry. Oh man, the 20th, this is perfect. You have, I'm gonna show you what it would have looked like just on the 20th, right around that time. You'd have had this even. This is what, the 8 a.m., 10 a.m. candle. So I would have taken this here at around 8, 10, or you could have waited, because it's 9, 10. You see this close? Sell. Get into the sell. What happens next? A little sound effect. But yeah, man, it's really that simple. You want to try to keep it to be that simple. It's over 100 pips sell off. You don't need all of that again. Could have gotten your 50 to 60 pips again, in no time this time. Like maybe by the end of the day. It's just, it just happens time and time again, guys. Alright, so let's just get it to where we are right now in the markets. We're almost there. Right now we're in November. We're just entering November, So And you see a whole bunch of chop, right? You see a whole bunch of movements the market's making that I'm not advising you guys to really trade. I'm just telling you where you need to start looking to pick your shots to enter. And the market, it'll set up for you. It's not something that you necessarily need to chase. If you know what to look for, it'll come to you. Like it'll just happen for you. This would have been a quick one. Oh man. And this is why you gotta kind of keep an eye on it. You can also have your alerts and everything. So every time the market's coming back like into this zone or a certain price that you want to see, it'll alert you and let you know. Then you can make your move. You know. Wow, that's gotta be over. Let's see how many pips that is. If you did get that entry. Short price range. So almost 200 pips, about 180. Almost 200. See? Breaker bounce. I'm gonna call the bounces here, and this is where you could. This is most likely where you get them wrong. These trades wrong. It's when these fake breaks happen, because you don't know. You just don't know if it's gonna break, find that support, and then actually keep going up, or if it's gonna break back below. But what you can count on is when it breaks. At least right now, when it breaks back below, that's more reason to get into sells for you. You know, and I'm gonna show you the time again. This looks like it's around London session, 3 a.m. 3 a.m. sell-offs. So if you did, try to trade this for that London session, you were banking. And the thing is, you have two entries. Have another retest over here, back at that same level. So if you missed here, you could have gotten into this one. Me just going over it, being able to see it in this way and explain it to you guys also, it's helping me as well. Because I show you all of this kind of playing out, from over here, from this last bounce. So, we're gonna go back and count how many bounces, how many trade opportunities have you had since this day. One, and this one right here. This is what I show you guys playing out. This is what I'm able to show you it forming in the live market and going all the way down to where it is now. Shit. And this one right here. Yeah, got something going on right now. Potential buys. I'm looking for 8 a.m. 8 a.m. But could be wrong. We'll see. We'll see. I'm also looking for too is for this to eventually come back and break this line. It's been on a downtrend for a while now. So, and it doesn't go down forever, right? It's gonna break to the upside sometime soon. Possibly. But let's just count all of our entries. So, So from here, right? From where your first slope was created. You got 1, 2, 3, 4, 5, 6, 7. This is 7. This doesn't count. The fake breaks don't count. 8, 9, and then, yeah. going to show you another way you could be entering these as well. And that was all the way from what, October? Yeah, around October to December. Had about 9 trading activities or opportunities, sorry. It's not bad at all. Catching. So we'll go over the numbers of that at some point. But with this now, yeah, guys, breaks. So yeah, that's what I was gonna show you guys. So I'm gonna start all the way over here. There's another way to see when the move is gonna happen too. They're called the breaks. Breaks don't only happen on these lines, like the downtrend line or the uptrend line, you know, when it's starting a new trend. Those aren't the only times when breaks happen. The breaks I'm talking about are on, again, on like your 4-hour chart. Right, so you'd come here, and basically what you're doing is drawing your slopes. You're looking for slopes over here. And you don't have to do this. You know, you definitely don't. You can just go off of the contact, the bounces off of here. But if you know, if you miss those, it's potentially, or you're potentially able to still catch those moves after they break the slope they had been creating. So this is where we're getting into the breaks, right? And I'll show you this also. Just, I think this is how to forex part 1. Just how it is forming. I draw it out for you also. So that's one slope that was going up. This is another one I see here. Right here. You see how they touch the, oh shit. Show you this. But you see how they touch, because you're going to have outliers. You're going to have like prices where it just kind of sticks out, those fake outs, those fake breaks. You're going to have that. You're going to have to look for where prices is coming together, all, you know, just for the most part, or it's following that slope for the most part, which is here. Another one is here, where you have the outlier. I mean, it's not really an outlier. It's still closing above the line anyway, so that's still very valid. And you have another break here, where this can also kind of line up with the breaking your zone. You know, your one of your zones here. What time is that? That's like London session. Wow. Holy shit. So we'll go back and see. Or actually, let me check the time right now while we're doing this. So I'm going back to 1 hour time frame. Let's see, where's that first breakout? It should start all the way back here. Okay. See? These are the slopes that you would be getting that you're able to draw out. You don't, again, this is an outlier. This is a fake, a push. This is like maybe the banks. They tend to do this. Like you'll see these weird just spikes a lot of the times when banks are trying to fulfill an order. You know, maybe somebody had an order down here, or in here even, that they were trying to get activated, and price definitely has to go down to that level for you to be able to activate those limits, those buy limits or sell limits. So you don't have to worry about those weird ones again, those really outlier ones. So this is our first break to the downside, right? Or not to the downside, but break up that retracement slope, which this is your retracement slope here. We know it's downtrending, but for a little bit of time it entered an uptrend, and there was a clear slope for that uptrend. So for this to continue being a downtrend, it has to break that slope, and that's what happens here. And these are also other opportunities to enter the market. Let's see, I'm just trying to see what time this was around. No, damn, this was U.S. session. It's definitely U.S. session. So that would have been a nice sell-off. Let's see the next one. So, right, it sells and then starts a new uptrend slope because this is the retracement. It's retracing up. So we got a slope going, comes back up to your downtrend line. Your main downtrend line shows resistance, sells off, and then breaks your retracement line. So I mean, this is just a lot of lines drawing to, so I understand if it's a little too much, but honestly I'm just keeping it simple. Like, I just have zones and slopes. Zones and slopes. Might be a t-shirt. Aside from that, let's see if we can get any other ones. Maybe this one right here. They're just quick. Like these, if you have an uptrending market and it's giving you downtrending retracements, it's gonna do the same shit to where you can draw downtrend lines for those short-term ones, those short-term retracements. So you got it here again. You're able to just draw that. Or even here, you wanted to kind of touch most of the candles. Go through most of them. It's weird. It's a break and a bounce right there at the same time. Broke here, bounced here, and sold off. See, you can never really tell. Well, sometimes you can. If these are the third sell-offs or the third attempts for a sell-off, a lot of the times that'll be the big one. Again, that goes back to that multiples of 3. I personally haven't caught them. I don't know if my psychology is there yet to be able to just hold like that, but definitely able to call out these entries to get, pips in my favor. I don't really see, you could also make an argument here with the downtrend because there's a whole bunch of slopes that get created. Slopes. Nah, never mind. False alarm. For this one, I can see a slope right here. And again, I'm on hourly, so you're going to see a whole bunch of candles. But a lot of times they just make just make their own slopes. Make their own shite. What is this? I might best be drawing too many lines, but I want you guys to see, like, you can do this also. That's bullshit. So we got a little slope here. Keeps going. Wow. Break right here. And that is roughly, well, this is London session. Around London session, because if you were looking at this here, if I can get this circle really small, god damn it. Alright, if you are looking over here and you're waking up, well, right now it's like 2 a.m. and you see this here, this break to the downside, this rejection from this zone up here. It's a whole bunch of pattern shit. You would want to look to sell. Honestly, see how much it did sell off, and then that's where, you know, again, your discretion of holding and how long you want to be in the order, and you know how many pips you want off of it. That's you. But from that level, you would have been able to catch maybe 50 pips, 40, 50 pips. And the thing is, like, this would be a good opportunity for just getting bad like a psych out, because what's gonna happen, what would happen a lot of times, and I'm gonna focus on this real quick. For beginner traders, you would want this to happen, but you would want it to happen earlier. You'd want it to happen like on your first or second trade. And that's rarely the case. So what happens is you'll sell it expecting this, and then get something like this, and you end up getting, in a way, exhausted. Like, this is an example of trade exhaustion. Not a good example, because it still is in your favor. It doesn't just, you know, kind of go back up, violate, or anything like that. But let's say, like, you had the order here, right? And this is where your belief has to come in. Your just, you know, that you're gonna be able to do this in the long run. And this is where belief has to come in. So we do 30 pip stop loss, right? It's 28, whatever. And we're going for 50 pips. That would have been caught. But let's say hours, we're going for 80. You know, definitely want that much. Been bouncing a whole lot. And price just never hit that mark, right? Price never went down there. What it actually did was, you were, what? You might have been like, if you took a standard on this, like $500 in profit, $400 in profit. You really want 800 off of this move from here. What would happen, and this happens from time to time, especially even if your entries are on point, but especially if your entries are not on point. The market would have came back, stopped you out. So from that $400, you would have went like negative 3 something, you know. It's like 15 pips, negative 150, 160. And, you know, if your stop loss is around 30 pips, you would have still been in the trade. But now, if you're watching the market, you're watching your trade go up and down the whole time, you're letting yourself get emotionally attached to this trade, it can really mess with your head. So what you might do, especially if you're like a beginning trader, you would close out as soon as you saw this, as soon as you saw it come back up here, or even maybe you put your shit down to break even. You know, you'd have been stopped out. You're like, damn, you weren't wrong, but damn, that could have been $400 if I just taken that, or, you know, things like that. And then if it would have been even worse if you did get stopped out, just to see the market come back and fucking sell off like crazy. So just a heads up, you know, this is where that trade exhaustion comes into play, and that's what you try to avoid. And how you do that is using your discretion, again, looking for those best entries, or just being fine with your certain amount of pips that you want. You know, these bounces, you definitely want a pip target that's under, you know, honestly, I want to say like 80 to 60 pips. These are relatively slow pairs you're trading to, UJ and AU. So, yeah, 50, 60 pips even is good. The only time you want those 100 to 200 to 50 pips moves, swing trading, is when there are breaks. You know, and I'm just trying to drill that into you guys' head. You have to know there's a time for everything, basically. So let's say, you know, you did close out and you've seen the market come back up here. It doesn't even look like it wants to keep buying. It wants to sell off. It was just retesting, honestly. So from there, from that, what you can do is you see a new slope created. Let's see here. New slope right here. It's about to get broken. Let's see what time it looks like it wants to break it. This would have been during the day. It's a hard one. This would have had to been a sell from morning, from, yeah. So maybe around 10 a.m. Don't know what day this is. But this candle, just from this candle closing, or 10 a.m., if you came to check the market around then, because you know how I normally advise 9 to 10, or 9 to 11, sorry. This was a good indicator. This candle right here was a good indicator of sells, because it broke below this support that was being created clearly, and then it started creating resistance, so it would not break, you know, it wouldn't break back above. For me, seeing that you know, that would have been a good entry. I think that is what we traded to. No, it didn't. But yeah, that's your retracement up, or your uptrend line. Retracement, you got your break and your bounce kind of happening at the same time. 200 pips. You know, these are the moves you can't really tell exactly when they're gonna happen, but if you are able to catch them, yeah, these are come up moves. This is normally what you would want to try to catch on a break, you know, like a trend reversal, basically. Let's see here. I mean, I don't know if I have to keep explaining all of these red circles to you. You should know what they are. It's definitely a fake break right here. At the time, you probably don't know that it's fake. You know, this is super fake out. But at this, like something like this, what is that? London, maybe. See, is that London? Not the best trade, because London is kind of giving you sells right there. That would have been a hard one. Honestly, you would probably have to wait for it to break back below to see what it really wants to do. So I would have been buys here. I would have been looking for buys if it continued up, but So after seeing it break back below your downtrend line, this is happening around London session. If you look 2, 3 a.m. Let's see. Yeah, you could just